Welcome to Markets Now. I'm Michelle Brook with Mark Schultz of Northstar Commodity, and we saw a lot of red on the board initially this morning in grain and livestock futures. Trade wheat is trying to come back, but Mark, really the main press has been in soybeans, and soybean oil was limited down overnight on rumors that maybe the RVO levels are not going to either be announced or maybe not be as robust as we thought. But right as we know right now, these are just rumors, right?
Yeah, I think for the most part, it's just rumor. We haven't seen any clarification out of USDA yet or out of Washington on this. So I think we've got to take a wait and see. But regardless, the market has taken a very sharp turn to the downside, especially in the bean oil being limited down, and it's dragging the bean market down as well. Now, both of those have enjoyed some pretty good rally this week. So we're giving a good chunk of that back. As far as the corn and the wheat, at least they're kind of bouncing on both sides here today, and the wheat's come back. So you couple that with what I would still view as a weather, which probably leans a little bit more bearish across the board for the commodities in general.
Yeah, and let's talk about that because weather, Western Corn Belt, dry areas are actually getting rain, aren't they?
Yeah, we've got some extremely dry conditions, subsoil moisture-wise in South Dakota, Nebraska, the northern part of Kansas. I'd say even the western 25% of Minnesota and Iowa would also be on the drier side. So you're picking up some moisture out of this, but the temperatures are going to go from being it's much above normal to below normal to maybe even much below normal temperatures with wetter conditions. And some of that rain is already starting to fall in parts of Nebraska. Moving up into South Dakota and even in parts of Minnesota, and more of it is to come here over the next 10 days.
Yeah. Now, even though soybeans are down as hard as they are this morning, corn has come off its lows. Wheat is trying to push back to the plus side. Have corn and wheat bottomed, in your opinion?
I think the wheat market is maybe a little bit more interesting than it is on the corn. And that's only because the wheat market has had quite a sell-off. We traded down to 5-year lows.
Right.
And I think one person, to me, a person has to look at it and say, okay, as a speculative trader, do I want to really go short wheat at $5 a bushel? I'd say the answer is no. I'd probably take more people would rather take the long side than they would the short side. So I think you got to a point and a price point here where you ran out of sellers on the wheat market. Now, and then I'll say this, if you can eventually get the wheat market to turn around and move to the upside, it eventually should be a little bit more favorable to the corn market.
It should. That feels like the wheat market down at those 5-year lows has been an anchor on corn, maybe has pushed some of this feed or wheat into the feed ration. So let's talk about corn because we still have good old crop demand. Look at the exports this morning.
You're absolutely right. I mean, another 66 million bushels in export sales on old crop corn. That's a pretty impressive number. Now, USDA lowered the projected carryout earlier this week down to 1.415 billion bushel. But if you look at just the export sales pace, either you've got to slow this down dramatically, or you're going to have to raise export projections once again. And therefore, I still think carryout on old crop corn probably is more closer to 1.35 billion bushel than it is 1.415 billion.
Okay. So the pressure that we saw on the spreads, the bear spreading that we saw here, has it capitulated, do you think? And, was it just this idea that we're going from 1.4, sub 1.4 up to a much bigger build here on ending stocks, or what's been pressuring old crop?
Well, I think the pressure, I'm a little bit perplexed on why we dropped the old crop corn price as much as we did. And maybe, in my view, probably overdid it to the downside. So we'll see if it can bounce back. But on the flip side, you've got potential of just old crop corn, and you've got what appears to be the harvest of the Brazilian safrinha corn crop. And that's likely to get started slowly, but probably by the end of next week. I wouldn't be surprised if they're already starting to harvest some corn up in Mato Grosso. And I do expect that production to be pretty good. So we have a little bit of a negative tone there for the corn crop with getting bigger in Brazil in this last report. I think it could even get a little bit larger. And obviously that corn will come onto the world market, which would probably put some pressure on us. But we're also being dragged down, I believe, a little bit more with the new crop corn price as well.
Right. And CONAB came out this morning to follow up what you just said about Brazil. USDA raised Brazil corn production to 130 million metric tons. CONAB raised both soybeans and corn production this morning in Brazil as well. So that might be part of the press.
Absolutely. And I would say that's just the start of what's probably to come. I think not only do I think they raise it up this month, I believe they'll raise it again next month as well.
Okay. So let me ask you from a technical standpoint on soybeans, we're still in an uptrend there. Where would we have to close today to flip that market over?
Any way you cut it, you're going to have to close above $10.80 on July beans on the technical side. If you can do that, then you've got something that's a little bit more favorable. Also, I would I'd say to people, I mean, bean oil has been the leader of the complex so far. And of course, it's dropping here. So you probably have some unwinding of selling the bean oil, buying back your short meal positions. So you got the meal going up. But I really don't see anything on the fundamental side of why the meal is going to make any type of a significant charge to the upside. If meal were to do that, then I would have a more optimistic on bean prices going higher. But watch the 1080 on the July beans. That's the technical signal that would suggest higher prices to come.
Okay. What about lower prices? We have to hold the 200-day moving average, right?
Absolutely. And like I say, it's enjoyed a pretty good move to the upside this week and now getting washed out here as far as today so far. But yes, it's more of a market that is going up because you're also getting into the seasonal time period where you got to look around and say, is there a problem with the crop or how's the crop doing? And for the most part, I would say there's very limited weather problems involved here.
Let's move to cattle. Significant pressure there this morning in both live and feeder cattle futures after we made new contract highs yesterday and then scored a key reversal. Is this a top?
You cannot ignore it, and I will not ignore it. It is a significant drop down. Now, that one part of the caveat with that is that sell-off happened all in the last 45 minutes of the trade yesterday. So we were sailing along at new contract highs and then all of a sudden washed it out quickly. So what I would look at right now is where we are with the cash cattle, which still looks like it's going to be maybe steady to higher for the week. We haven't seen enough of it yet to really establish trade, but what has been done has been higher than a week ago. So I think that's at least a little bit interesting. And of course, you've got the futures at a significant discount to where we are with the cash market. So the futures, people would always ask, where's the high? Well, or not, what will ever stop the market? Well, high prices will eventually cure high prices in here. You can't ignore the technical daily key reversal lower. Watch to see if we stay away from a weekly key reversal lower.
Yeah, that's going to be really important to watch that area on the charts. The other thing is, boxes finally saw a little softening yesterday. Is that maybe a little bit of a break to the psychology of this market, you think, too? Or is this concerns? I'm hearing rumors about being worried about New World screwworm in the U.S.
Well, anything can come up with the prices as high as they are. And of course, speaking earlier this week in Tulsa, the attitude was there appears to be nothing can stop it. It's going to continue to go higher and higher. And I'm going, well, that's exactly what probably changes the market, is that everybody gets so optimistic that I'll never want to go lower, that they get complacent and it's always going to go on up in here. I think the fundamentals, when I look at it right now, fundamentally, the market still looks pretty good, pretty solid. In here, your demand has been okay. I think if your equity market, stock market stay away from any type of collapse, I think we'll still stay in here. But you also have the one other part of that, and that is we're probably going to get or closer now to the end of the best demand period of the year for beef. And that usually comes to an end between now and the 1st of June.
Yeah, because they're buying what, 60 days or 90 days
Correct.
ahead or something like that?
Absolutely. A lot of that purchase is already being done. Correct.
And the hog market, we were lower yesterday in tandem with cattle. Looks like, are we following cattle today, or is that a function of June becoming the spot month at a pretty good premium to where the index is?
I'm more concerned about the fact that it is the futures are a premium to where the cash index is. We really haven't done anything on the pork cutout price to move up. It bounces around here, but you need to break out. If you want to trade $102, $103 futures out into the summer months here, you better start having a pork cutout price moving up towards 105 to 110 in order to support it. Now you're at the time period where we should start seeing that demand for pork get stronger, and that typically lasts right into the June, July time period. So I still have some optimism on that. On the flip side also, which I still look at, and that is your deferred hogs from December on back, contracts are all posting new contract highs. That's usually a pretty good sign too.
Okay, thanks so much, Mark Schultz, Northstar Commodity. That is Markets Now.